So we're still talking about what's going on in the oil and gas markets as of this morning. It got a little better, slightly above $33 a barrel. That's Brent crude up about 0.01% to about $33 per barrel. But let's bring in Okpeyemi Oguntade, who's a senior investment officer with financial derivatives company, to take a look at why we continue to see weaker dollar prices and its pressure on oil futures. Good morning to you, Okpeyemi. It's great to have you in the studio and on the show today.
Good morning.
So we're saying that weaker dollar continues to pressure oil futures, but it also seems as if they're getting a breather. Brent crude is slightly up, above $33 per barrel.
Yes, the reason why we have oil futures coming up is because Russia called for a meeting with OPEC members to cut outputs to boost the prices, and if we're familiar with what's happening in the Russian economy, we're currently in a recession. The Russian ruble has gone down to an all-time low, and you have the Western sanctions imposed on Russia. So Russia is looking to, encourage OPEC members to cut down on production to boost up prices. But Russia's production is currently at 10.8 million barrels per day, which is a record high from its new post-Soviet Soviet Union record, and this is even close to Saudi Arabia's production level of around 10 million barrels per day as well. But the question is Saudi Arabia really willing to cut down on production now, given what's happening in their economy as well? I mean, over a year, they've lost about $100 billion in their financial reserves, currently at $630 billion. Nigeria's reserves are about 4% of that. And so Saudi Arabia has an objective, or has some duties to perform. He has to supply his export network, and he also has to supply domestic refineries as well as its petrochemical industries. So asking them to cut down on production isn't exactly appealing to them, considering the fact that they wanted to cut down. They were willing to cut down production last year, November, prior to their
But then now they look at it that it's going to be in their favor if they keep production levels at the quota they have it right now.
Yes. And if you look back at what happened last year, I mean, they did call for a meeting with non-OPEC countries to try and agree on reducing production. But at that point, Russia wasn't ready, and then now it is ready to reduce production. So it makes me wonder, would Saudi Arabia really listen to Russia at this point, considering that they've already told them that they expect they expect them to run out of reserves by 2017? Are they willing to cut down on production now? Are they willing to give up that market share? Because 1 in every 9 barrels in the world, one comes from Saudi Arabia, and I don't think they're not willing to lose that market share just yet.
Even though we're seeing cheaper oil prices at the moment, it's still failing to kill the, let's say in quote, kill the US oil boom that we're also experiencing.
Yes, it is. I mean, if you look at what happened yesterday, the Energy Information Administration released its report, and US crude stockpiles went up by 8.4 million barrels, and this is the highest in 80 years. Like, it's really high. And you're also looking at their production levels. From 2005, they were producing about 4.6 million barrels, and now they are currently at 9.6 million barrels a day. So US production is still, although you have rig counts coming down, but production is still high, and this is contributing to also the negative sentiment in the market.
But this is not an anomaly.
No, it's really not. It's something that has been in place since 2014, and they're lifting their export bans now, and coupled with the fact that the US Fed has decided to maintain their stance on their interest rates, this contributes to the weaker dollar we're seeing in the market. But even with the weaker dollar, the demand we need for oil prices to come back up is just not there at this point.
So what's next for the oil markets? If what you've just said, the demand that we need to push the oversupply glut out of the market doesn't come.
I mean, what's next? I think they should cut down on production, but that's highly unlikely with what is happening.
That's
with Iran coming in as well. Iran, I mean, the only thing that would would push OPEC, or rather Saudi Arabia, let's just say Saudi Arabia, to cut down production is if you have an agreement between Iran, Russia, and the US, and Iraq as well. And if you don't have an agreement with all those 4 major players, I don't see any reason why Saudi Arabia, because those are their major competitors in terms of market share. So
what if they decide to reach an agreement? in the
That would be
situation, because
fantastic.
because Russia has called for a meeting,
Yeah.
and well, in the eventuality, everybody just sees that because of the pressure that we're seeing in the markets globally, let's just reach a compromise and sign this agreement, and all four of us go home happy.
That would be a very good deal to make, but I doubt if that's going to happen anytime soon. But if that happens, I mean, that would be great news for Nigeria, and we can have oil prices coming back up again, because now the markets would have this positive feeling of, okay, right, supply side is coming down, and prices will start to pick up again. But looking at what's happening, that's very unlikely.
Well, Kwemi, as I said, it's wishful thinking, but thank you so much for coming on the program
Thank you
this
for
morning.
having
Of
me.
course, giving us the data that we use usually on the program to talk through what's going on at the commodities market.
Thank you.
Okweme Guntade is a senior investment officer with financial derivatives company, giving us an insight and an analysis of what's going on at the global oil market. As this morning, oil prices are trending. Brent crude is trending slightly above $33 per barrel. But we'll keep our eye on that, and we're still talking about renewable energy later on the show. You can also join that conversation. But coming up in just a moment, we'll take a look at how all of these global trends, particularly the drop in oil prices, is affecting sub-Saharan African markets. The conversation with Oscar Onyema, CEO at the Nigerian Stock Exchange. Join us again.